This week's trades, market movers, and technical levels that count, wrapped up with clarity and precision. This is Weekly Wrap Up with Verified Investing.
Hey folks, welcome to the Weekly Wrap Up. Of course, I am Gareth Soloway, Chief Market Strategist here, and we're going to dive into all the chart analysis that will set us up for next week when we come back from the weekend. So first and foremost, markets did get a little bit of a bump today. So we continued the rally, the fifth update in a row. If you watched this morning's game plan, I talked about key levels that we were likely going to see. But once we saw those, be ready for the next down move in the market. Well, guess what? The S&P did tag it just into the close. This sets up for a neutral to lower Monday, maybe even a harder sell on Monday. Let's get into the charts. We'll start with the bigger time frame here, or I should say the smaller time frame. This is the intraday 10-minute chart. And what we can see here very clearly is that the S&P opened slightly higher today. This is where it closed yesterday. And again, we kind of floated up a little sideways chop, and just into the end of the day, we got a little short covering pop to end the day. So when all was said and done, the S&P was up 0.5%. The NASDAQ gained 0.75%. Now, the big factors are this, right? So if we look at the charts and we flip over to the bigger time frame, let's go over those points that we discussed in this morning's game plan. All right, so the first big one was this gap fill right here on the S&P. If we put a trend line there and drag it over, look at that. It goes right into that level into the end of the day. In fact, if we flip back to the 10-minute chart, this surge right here took us right to that level. Flipping back to the daily chart, there it is right there. Now, we've now had 5 straight up days in a row on the S&P. 1, 2, 3, 4, 5. Impressive rally. But does it make me think all of a sudden the markets are just going to continue to go and hit 7,000, 8,000 on the S&P? The answer is no. Why not? Well, because we have the bigger parallel. This bigger parallel right here has capped the market both to the downside and stopped further losses, as well as to the upside. And you can see, again, COVID lows, bear market lows here of 2022, liberation tariff sell-off low right there, and then capping the upside, the bull market here. So until proven otherwise, this remains a pivotal level that to me is a line in the sand that we would have to get above there and confirm before I'm a believer that the markets will just keep rallying into 2026 and beyond. Now, that was number one. So we filled the gap. All right. We also hit the 786 Fibonacci retrace. So there's a bunch of little factors on a technical analysis basis that tell me next week, whether it's Monday at the start or not, again, I would generally expect a rollover to start in the markets. Now, flipping over to the QQQ, here's the NASDAQ 100. Now, the NASDAQ 100 is important to look at because, again, essentially what you're looking at is the tech sector. And again, a majority of this is the AI Magnificent Seven, the NVIDIAs, the Apples, the Microsofts, the Metas, et cetera, the Teslas, et cetera, right? So again, when we're looking at this, we had this beautiful upsloping parallel. It broke here, and look at what we're coming into. Now, we didn't technically tag the lower end, so it does leave the ability for the markets to maybe gap up on Monday or push up just a little bit to tag the QQQ trend line. But then you would expect a retrace to then see selling to come back in. So again, we're almost there. I mean, look at how close we are at this point. Another 0.25% or so on the NASDAQ 100. And we tag this 621, 622 level here on the QQQ. And again, as we know, technical analysis works where when you have a trend line, right, and you keep hammering it over and over and over again, and you finally break, there's a tendency to go back to that former level right here and then get the next leg down. In other words, support, once broken, becomes resistance or a rejection level, okay? And that's exactly what we're forming right here on the QQQ chart. Now, the US dollar today continued to inch lower. It looks like it's borderline beginning to break this trend line on the DXY. That's interesting because it does, if we were to break this, it does open the door to another leg lower in the dollar. And again, just something that we should keep in mind. As we know, the Fed is likely going to be cutting in December, the December 12th meeting, which is just about 2 weeks away. And any sort of lenient monetary policy will ultimately erode the dollar's value, right? The more lenient, the more dovish the Fed is, then the weaker the US dollar becomes. It can also fuel inflation. So we're going to have to watch that very carefully, as we've seen in past instances where the Fed cutting rates, which floods the liquidity into the system, it can in fact encourage price hikes because, again, there's a competition with more money out there for the same amount of goods. Okay, so that's where we are right now. Next week, one of the main factors I'll be watching will be the Japanese 10-year, same thing here, potentially causing some issues in the bond market or the global loan or credit system. So again, keep that on your radar. Next up, we have NVIDIA. Now, NVIDIA today, check this out, guys. NVIDIA was down on the day about 2%. So while the markets rallied, NVIDIA continues to show weakness here, well off of its all-time highs just from the end of October. So again, basically 1 month ago, we were at $212 a share. The market cap of NVIDIA was over $5 trillion. And here we are down significantly on NVIDIA. Now, the question is, have we broken down? And the answer is not quite yet. Right. So again, we talked about this morning in the game plan, but I'm really watching this zone right in here. Right. There's just so much support because of all this sideways chop. Now, if we start getting below, and I said it this morning, the 165 level, then you're easily headed back to $150. And by the way, at $150, if we do tag that, look at this, guys, $150 would be a move all the way, basically a 30% drop on NVIDIA. And you might say, well, where is he getting $150 from? And basically it's from right here, right? So we're going back to 2024. Where was our high, right? So when we rallied from 2023 on NVIDIA all the way up into 2024, that's where we had our big correction before we came up and we broke out. And just like the other chart we were looking at on the QQQ, what do we know about support and resistance? Well, what we know in technical analysis is that generally this was a resistance line. It hit, rejected, fell, rallied, broke out, retraced to the scene of the crime, which now becomes support and catapulted higher. So the idea is this is now support. So if price were to fall into it, you would expect a bounce off of it. All right. So again, this is that target. You'd expect a bounce off the approximate 150 level. Now, part of the reason for NVIDIA's weakness is just in the last week, we heard about, number one, their earnings, right? A couple of weeks ago, their earnings came out. But also we heard that Meta is thinking about going with Broadcom chips instead of NVIDIA. All of a sudden, NVIDIA is not just the one shining star in the sky. They now have competition. And by the way, competition is going to continue to come. More and more of these players are going to come out with chips that are comparable. It's just the nature of capitalism, where when you see a product that has incredible margins, people are going to say, well, let's do that because we can make a lot of money doing it, right? And so that's going to drive down price, which is good for you and I, right? And data centers and all of those other things to bring prices down. But it's also going to hurt the margins and ultimately the profits on names like NVIDIA and other ones. Now, if we go to the charts, take a look at Broadcom. Broadcom just continues to go higher because of this now newfound kind of credibility on chips, right? So now that Meta's thinking about it, people are saying, wow, they must have great chips. Now, for me as a trader, I say, okay, well, who cares about the chips? What is the chart saying? And the chart very clearly shows, and I said this morning, that there's a major trend line here to here, right? These two high pivots, and we are very close. So this will be a good, or should be a good short level right around 410 to 411. We got as high as about 403 today. And then if we get up to this level, I would expect a pullback on Broadcom. So keep an eye on that on technical analysis basis. Now, last chart, I want to revisit this because we have seen a big bounce in the semiconductor ETF. But just remember that the extension move is exactly 102% in 2021 before a 45% correction. The 102% extension from the 200 weekly moving average was 102% in 2024. And then lo and behold, folks, this is again that miraculous type stuff, right? If we take a look at this from the 200, here was your high, right up here. So we go from that point right down there and we do a move up, and look at that, 102% to the upside there. And so what this tells us is that if you look at this chart, we can see that here in 2024, you had 1 week, 2 weeks, 3 weeks down, and then you had a bounce. Here in 2025, 1 week, 2 weeks, 3 weeks down, and now a bounce. So it's really, don't let the move up impress you. Be harder to impress, and again, the point is, if you look at history, that's very normal. 3 weeks down from a bull market high, you're going to get a bounce. Does it mean that all of a sudden we're going to new all-time highs? We'll have to see. But what we do know is historically, 102% is the max, apparently, that the SMH can get away from its moving average before it gets pulled and roped back in. All right. A couple other things I want to go over. We have Apple here. Apple, again, I still think there's a little bit more upside in Apple until we hit the high end of this parallel. But again, very minimal upside on that. Amazon continues to have a bounce after this nasty sell-off. This was the earnings move, by the way. And then look at the rollover right to this longer trend line. And then it's had a great bounce. Again, keep an eye on that. If it gets high enough, I'd be definitely interested in a short on that. Google continues to stay kind of neutral the last couple days after making new all-time highs. It's kind of stalled out. Even in today's day, we basically were flat on Alphabet / Google. And then Meta has had a great bounce. It kissed my line here. Now, does this mean that the chart didn't hit the line, or does it mean my line was a little off? And honestly, it probably means my line was a little bit off. I probably should have connected through this low instead of this low. And watch, if I do that, what ends up happening? Bring it right up there, and we go right there. And that was probably, again, this is where technical analysis and trendline analysis, you have to be aware that, we are only human, right? We're going to connect it where we think it should be. Does that mean that's where the chart thinks it should be? No. And who's right? Am I right, or is the chart right? The chart's always right? So if it doesn't hit, it was probably my error. And sure enough, now we have adjusted it to say, okay, from this low to this low, it pierced here and then bounced. And then there's that low right there. Pretty cool stuff when you start to play around with trend lines. I always say trend line analysis is partially a science, but it's also partially an art form, right? You have to kind of figure it out on your own and try different things. All right. Now, here we have Bitcoin. Bitcoin had a great move early this morning, touching 93,000 and change. It has pulled back. The pullback, honestly, if we stay a little weak today and over the weekend weak, that also lends credence to a stock market pullback. So what we have seen in this cycle and in the 2017 Bitcoin high cycle and 2021 is that Bitcoin tends to lead the market, right? So all of a sudden we saw a bounce here. Markets have bounced. Now, again, is Bitcoin going to start stumbling, or does it still have a little bit more upside, or maybe just a small pullback and then more upside? But either way, the weakness in Bitcoin today tells me to beware of risk assets early next week for a pullback. Now, we got to talk about gold and silver, guys. Wow, what a move on silver today. All right, so silver blew right through its all-time highs. I'm impressed, to say the least. Let's take a look at silver. Look at this move. We had the upsloping trend line, which we banged on a few times. We came right up to this triple top, and we blasted through it. Now, this is a big potential breakout. Now, notice I'm using the word potential because it hasn't confirmed yet. So we have to see on Monday, does it confirm? I'm a little suspect when silver makes such a big move when you have so much of the institutional money on the sidelines. Meaning that, again, how many 100 millionaire traders out there, or billionaire traders, or funds do you think were really trading today actively, the day after Thanksgiving when the markets closed? Plus, we had that CME issue early in the day, which kind of screwed up the whole system as well. And so let's see. This is why I use the confirmation signal to really monitor this. Now, again, great move on silver, up almost 6% today. But if we flip to this weekly, this is what we have to watch. Are we breaking the current cycle high? In other words, maybe it's not the cycle high. Let's watch and see. And I did tell you guys, if we break through this and we confirm, number one, $57 would be your first target. By the way, we're already at 56, so we're basically almost there. And then 60 to 62 is the next level to watch. Now, flipping over to gold, gold broke above this wedge pattern high. As with silver, it is an unconfirmed move. So we have to see what happens on Monday. But again, if we confirm, then we should head to the all-time highs on gold as well. per technical analysis. Incredible, really incredible resilience. And again, I mentioned this in the game plan this morning, but the resilience in gold and silver, it's not that the economy's strong, right? Because gold's not really an economic indicator. It's more of a safe haven. Silver, you could argue, is. But to me, it's more just showing how little faith all of the world has and is continuing to have in fiat currencies. Like, we don't trust our governments anymore because they don't know how to control spending. They don't know how to balance a budget, apparently. They don't know how to not just print money anytime something goes wrong. They just go right back to the well, diluting the currencies, which again, long-term is probably good for Bitcoin as well. Short-term, obviously, it's a risk asset. But with gold and silver, very pure form, that it's an alternative to fiat currencies. Very interesting. And I think it speaks a lot to what is going on in the world, in the US, etc., with everything out there. All right. Lastly, let's go to a couple charts here. Again, I did go long some oil the other day. So far, so good. Next week, I'll be watching to see if we break here. Do we get a breakout on the oil trade? Can I make out more money? I'm up a little on this trade, but I want to see the breakout of the cup and handle pattern. We need to get basically above $60 for a breakout. And then lastly, natural gas had a nice move today. Still hasn't taken out these near-term highs, but I'm still kind of thinking that if we get one final push on nat gas, we're headed up to this low here and this low. And that would be $5.30, which again, it was support, bounce. And then even in here, look, support, bounce, breakdown. And so what did we just go over in this game, in this weekly wrap up? That support, once broken, becomes resistance. This would be my shortable level around $5.30. Guys, don't forget, our courses are on sale just through Sunday, 50% off. Everything I know, everything in this brain is in that winning trader series. It's about an 18-hour course. I know it's a lot, but listen, I mean, you want the quality, right? You want the in-depth knowledge. So that's on sale, 50% off, and then all of our other courses as well. So take advantage. As of Sunday night into Monday, they will not be for sale at a discount anymore. So grab them while they're hot. You guys go have a great weekend. Thanks so much. Happy holidays, folks, and I'll talk to you all Monday morning. Take care.